Every time you get your paycheck, you can see how much of your money goes to pay income taxes. Have you ever wondered how much of the wealth you have built up for retirement will be lost to the expensive income taxes? Does your retirement planning include being in a lower tax bracket than you expected during your retirement years? So back with us today are Gary, Mattson, and Laurel Stewart. The father-daughter team are with Mattson Financial, a full-service financial and retirement firm in Grand Rapids. They're also a popular radio show hosts. Okay, a lower tax bracket, is that actually possible?
Don't we always want it, right?
Yes. And it is, it depends on how your plan is set up and, what you've done so far and where you're taking the funds from. But that's just it, it's sitting down, making sure you have a plan in place and knowing, what piece of the puzzle and when you're taking that income.
Interesting. So you're saying that it's actually possible to receive retirement income from our nest egg without paying income taxes?
Well, lowering those income taxes may be a proper way to say it, but what it's about is making sure that you have the income and you're not crossing over some certain thresholds of different areas of income coming in. Give an example is that if you're taking money from a Roth IRA, it's taxed totally different than you're taking it from your IRA or your non-qualified account. And that's why we talk about the 5 buckets you should have in retirement of assets where they should be placed, and so we have that opportunity to lower taxes.
Why do you think there aren't more people taking advantage of this?
I think it comes down to a lot of investment advisors out there just don't have that conversation or the knowledge to do that. They're focused on the returns and the investing piece, but maybe not on the legacy planning and your tax design. But the problem is without those pieces, you could be setting up, a really major tax bomb for you later down the road.
And let's face it, the advisor's not motivated that way. Our motivation is that if the clients do well, we do well with that client. If those dollars go away from the client in taxes, we feel that also. So our goal is to leave as much money in the client's account as possible.
Sure. Okay, so I thought the taxes would be the same whether we paid them now or paid them later.
Yeah, tax deferral has always been the mantra. Yeah. Wait. But also is that right now, what changed that is, of course, President Trump's tax plan. So what's going to happen, that's going to sunset, and when that does, we're going to lose some of those deductions we had prior because of the standard deduction they've given us. And that standard deduction is going to go away. So now's the time to take advantage of those deductions in the plan, and no matter who you are out there, if you've taken income, there's availability to make it better.
Are there other benefits to this tax optimization planning?
Yeah, looking at just for your required minimum distributions, for example, when you start having to take those, whether you're 70.5 or 72, depending on where you fall with that Secure Act, but taking that money and then looking at your Social Security coming in, there's a lot of different pieces that have a tax focus. And so, depending on what you're doing at that time, also, are you fully retired, enjoying what you wanted to do, or maybe you're still working. So it's very individualized, and that's why no two plans are alike.
Yeah.
And let's face it, let's say you have $500,000 and you can save 2% taxes on that. That's an extra $10,000 a year, either use as income or use for the future of things. And let's face it, that's big money.
I always like it when you share your client stories, because a lot of people can relate to them.
Absolutely.
So what are the differences your clients have seen when it comes to this level of planning?
We actually had a lovely lady came to us, and she's been with the same advisor, her and her husband, for 45 years. In the last 6 years, she's been doing it on her own. So she brought her beneficiary of her accounts with her, and we went over things, and she said, my CPA said, oh, you did really well, because you just paid $382,000 in taxes. Now, the firm, good or bad, what they did is they sold off all the capital gains that she had in the account, and now she paid taxes on that. Then the following year, they saw off losers, and so she's not having taxes on that, but it takes as a tax deduction. We could have used those losers a year before to offset some of that taxes. She really paid about 50% in taxes that she should have never paid.
Wow.
And unfortunately, she has now passed, so all that free tax deduction went out the door. So that's a loss to the client and to the beneficiaries, and a gain to the government.
Sure.
Now, don't get me wrong, I serve in the Air Force. I believe in what we do here as a country, but there's right ways to pay taxes, and maybe not so good or wrong ways to pay taxes.
Yeah. And you have something to offer our viewers. Can you tell us about it?
So for the first 5 callers, if you saved at least $250,000 for retirement, we'd love to have you call in to schedule a time to sit down with an advisor and start discussing your plan. Your investments, what about the tax piece, and your legacy planning as well, if that's something that you care about.
Okay, so if you're at home, if you want to learn more about how to tax optimize your retirement, Mattson Financial has a great offer right now for the first 5 callers that are retired or nearing retirement. They're offering a complimentary full-blown retirement plan just for you. This will allow them to sit down with you personally and provide you with a roadmap, analyzing where you are right now and discussing your best steps to get ready for a successful retirement. A game plan to get you where you need to be. The number to call, 616-514-3831. Again, that's 616-514-3831. And so, Gary and Laurel, thank you so much for joining us today.
Thank you, Rachel.
Happy to be here.